Dear friend, 3% economic real GDP upturn is steady recovery or tariff-driven analysis. Peer style as a string of real GDP expanded at a robust annualized reversing a 0.5% drop in quarter 2 rebound appearance strong, but what is behind it? A precipitous drop in imports played a major role. Artificial from Financial Times, Market Watch. Consumer spending contributed positively, rising 1.4 annualized with gains in both goods. Eye on housing, norm yet private investment plugged. Investment in structures and exports declining significantly. Business activity. Eye on housing, norm. Domestic purchases rose only 1.2%, the lowest 2022. Market Watch, CBS News. Some analytics warn this makes when averaging quarter 1 and quarter 2. Market Watch. When averaging quarter 1 and quarter 2. Growth Watch. The volatility appears closely tied to tariff drives, disruptions, and trade-related timing effects. Financial Times, The Guardian, and Market Watch. Still, the rebound dispelled immediately. Post. Inflation pressures appear to be moderating. The GDP price index flowed from the inflation also fell to around 2 on housing. The Federal Reserve kept rates unchanged. Some forecasters expect growth to slow, projecting 1.32% growth with risk from tariffs, weak consumer investment. Kiplinger Watch. This is 50 sentences of advice as recovery should be treat the sharp drop in could weak business investment undermine? Is the import drive when GDP reaches lakh could over-raising quarter 1 and quarter 2 result revealed a more realistic picture of growth 1.1 to 1.2% or tariff in introducing investors prioritize labor market strength over recovery. Could renewed job gains offset soft week? Should businesses adopt caution given mix? Should policy makers focus on core demand indicators rather than headline swings? Might consumer shift? Could false optimism from temporary? Might rising energy prices dispute the deflationary trend seen in or underlining demand trend rebound? Should investor confidence weigh more on sustained bounce? Might the Fed remain cautious given ongoing data disasters? Could a second dip arise if quarter 3 investment further? Should we be view GDP slowdown if they learn too heavily on might fiscal support be needed if still on the sidelines? Could structural challenges like aging demographics come? Should markets prepare for rate cuts if still derail recovery, or global growth risk like China's slowdown amplifying US uncertainty? Could stronger labor data sustain consumer deflation stays near 2% and the growth weakens? Might economic forecasting need more downward reversion given soft quarter 1 growth? Could consumer segments like healthcare should portfolios tilt towards domestic demand? Might central banks globally mirror the Fed's cost? Economists give more weight to multi-quarter average over volatile quarters. Might quarter 2's bounce mark to sustainable growth? Contribution to percent change in real GDP second quarter 2025 real GDP. You will find here are two helpful visuals comparison. Imagine one a BA chart showing sector contributions to US real GDP growth in quarter 2 2025, chart detailing real gross output changes by industry in quarter 1 2025, giving insight into sector specific shift just before quarter 2's rebound. Key insights quarter 1 versus quarter 2 mainly due to a surge in imports and declining government spending. Quarter 2 2025 real GDP rebounded to quarter 2's GDP growth. Consumer spending, personal consumption expenditures PCE rose approximately 1.4% annualized, adding point the GDP growth. economics.td.com, advisors perspectives.com, Reuters trading on unusually large boost contributing nearly plus 5% point to GDP growth, marking one of the biggest trade related swings since 1047. economics.td.com, wsj.com, Reuters. Export dropped by about 1.8%, slightly detracting from growth. cep.td.com, business investment mixed performance, equipment and intellectual property 6.4%, but structures investment 3%. Government spending mildly increased, overall state and local spending up around. Cutbacks approximately minus. CEPR economics headline figures. economics.td.com, advert in rebound. 3. Sector performance in quarter 1 2020. Private goods producing industries and government, including health care and social assistance plus 2.8%. Summary comparison table. Quarter real GDP demand. Quarter 1 2025 minus 0.5% directly. Quarter 2 2025 plus 3.3 soft. Quarter real GDP growth. Key sector drives investment. What does this tell us? Quarter 2 rebound largely stems from paid distort, improved modestly and helped, but the recovery is fragile. Investors, businesses and policymakers should be cautioned. The near-term picture is unlifted by short-term trade correction, not sustainable growth. Sector level performance in quarter 1 of declining. Border structural challenges. 3. Please like, subscribe and comment. This is another one. GDP growth, the min. You will find out the GDP growth, how to growth, gross output, private goods, private services, government. US Bureau Economics Analysis. This is the chart.